It's a big week for the stock market. It's a reality check for everything we've seen in the last few weeks. Iran war breaks out end of February, stock market tanks, NASDAQ down roughly 10% plus. You can't invest directly into an index, by the way, but you could invest in a security that tracks your Mixin index. Stocks go down. Microsoft loses about a third of its value. The other magnificent seven stocks, you know the names, they tank. Then we have a big rally, and here we are, weeks into it, 8 weeks into a war. Stock market's trading at all-time highs. The stocks that we saw in the tech sector recovering, in particular the Mag 7 stocks, Microsoft, Google, Meta, Amazon, you know the names. We see them. We talk about them. NVIDIA is now again, a $5 trillion plus market cap, and it's exceeded its previous highs. It today hit a new all-time high. So we have very little to complain about. Investors are kind of confounded with how are we having this war? Everyone talked about how we are seeing a bubble in AI, in particular the stock market, not just in spending, but in the prices of the stocks of the companies that are doing the spending. And here we are. We're at record highs. And it needs a little explaining. And I think what we are facing right now is actually a pretty big reality check because 5 of the 7 Mag 7 stocks are reporting this week. We have, to begin with, on Wednesday, okay, this is just on Wednesday, we have Alphabet, Microsoft, Meta, which is Facebook, and Amazon all reporting Wednesday after the close. So it's going to be a huge day of news. We have seen these stocks go up huge after earnings, and we've seen them go down huge after earnings. And Thursday, we get Apple. This isn't a call or a prediction. I'm not going to do that on the live stream on what the earnings are going to be, who's going to beat. But I will tell you the earnings are expected to be very solid. I think it's fair to say that investors are gearing up for a really strong earnings announcement from all of these companies. That's why they're trading up. And I think investors are expecting beats and guidance raised, revenue guidance raised, everything rosy. I'm not so worried about that because I've seen all of these stocks take big hits in aftermarket trading after an earnings or revenue miss or some margin miss or some key metric that people thought this is the end. It's all over for this company. And a week, 2 weeks, maybe a month later, the stocks come right back up and they make new highs. And this keeps happening over and over. And I think we need to talk about this a little bit more. So first of all, you have to keep your cool. You can't let this drive you nuts. You can't make a trading decision, in my opinion. Oh, look, you can make a trading decision on anything you want. As an investor, I'm not making my decision based on a short-term earnings move, up or down, good or bad. That's not really what's relevant to me. What's relevant to me, what's relevant to you, I think what we need to be focusing on is what is the path? What is the path to monetization of AI? Right now, less than 5% of AI users pay for it. And of those who do pay for it, their money is still not paying for the cost of their AI use. Most enterprises, that's what we call business accounts, enterprises. I don't know why we don't just call them business accounts, but enterprise accounts. Most of them are actually the fee that they pay, the revenues of $200 a month that people are paying, still doesn't cover the cost of what the LLMs are spending to deliver the results, the output in their AI use, okay? LLM, large language model, that's what a chatbot is, okay? So we need to see, is there a better path, a clearer path to monetization? We are no longer discussing adoption of AI. Like, you know, is OpenAI, which owns ChatGPT, did they surpass 100 million users a week? Did they surpass 300 million users a week? They're probably about 1 billion users per week now. And the other ones, you know, there's Copilot for Microsoft, which I don't really hear too many people talking about that unless you have to use it because you're in the Microsoft corporate environment, and a lot of companies do make their employees use only the Microsoft Copilot AI. There's a reason for that because everybody brings their own device to work. You know, you come to work, you bring your own phone. Well, people are now using their own AI accounts to do their work at work. And corporate managers have no idea how wild their employees are running right now using their own AI and putting company secrets and company news and company information onto ChatGPT or Claude. And corporate managers just have no idea how much this is going on. And they haven't been really, we don't really see a lot of enforcement about that, but we do see companies migrating toward co-piloting that. But that's a story for another day. What we want to see, monetization, what we want to see is above and beyond adoption. We know AI is being adopted. So this is no longer a story about broad or mass adoption. What we want to see is the spending. Will the hyperscalers keep spending like they were? We had a dip in these stocks earlier in the year, a little recovery, and then a bigger dip after the Iran war. But the worry was that, the spending can't be better than it was last year. The spending is just too much, and there's no way the hyperscalers can keep up the kind of spending they're spending, $400 or $500 billion in 2025. Well, they come out with about $700 billion in spending commitments for 2026. So way above and beyond what anybody expected. So that is now not the new, well, I should say it's not the new special thing. It's the new normal. So what are companies going to indicate that they're going to spend for next year? $1 trillion, trillion and a half? Because you have to beat it. You have to keep going higher and higher and higher. Because if you don't, Wall Street anticipates a slowdown in spending. They anticipate a slowdown in margins and growth and profits, and all of a sudden stocks go down. So what's going to keep the party rolling? We need to see, are the commitments to spend on AI still there? Is there a path to monetization? We're all using AI, but is anybody actually making money from the AI? Yes, NVIDIA is making a ton of money because they're selling the picks and shovels, they're selling the chips. Broadcom, Advanced Micro Devices, SanDisk, Micron. These are companies that sell memory chips or GPUs or CPUs. Intel's had a big rally. These are great, good for them. They're selling the hardware, the picks and shovels for the gold rush. So they're not really worried if gold is found or not. But eventually, if the gold isn't found, then the stocks that are selling the hardware start to get reduced orders. This is exactly what happened in 1999 and 2000 when the internet bubble burst. The companies that were selling the picks and shovels like Intel and Cisco, which took 25 years to regain their magic, they finally got clobbered like everybody else. New technology came out. It made companies like Nortel, like Lucent, like EMC. It made them virtually obsolete overnight. So we'll see what happens. I do think a fate that's pretty bad awaits a lot of publicly traded companies that have been trading up a lot, because I don't think they're all going to be winners. But right now, we're not at that point. We just want to know, this is a big week. This is a reality check. Can corporate spending keep going? Are these hyperscalers that are reporting earnings this week, okay, are they going to come out and say, we're signing up more enterprise customers? We need to hear this as investors. We are listening for that. So can the spending keep up? Is there a path to profitability? Are enterprise customers signing up like crazy and paying a ton of money for the AI tools? That's what I'll be looking for, okay? I'm not worried if a company says one thing or another that maybe is not quite as rosy or as optimistic as the street had hoped, because the stocks are up a lot, and it's an excuse to take some profits and the stock goes down. That's not what this week is about. This week is going to help us affirm what we should expect for the rest of the year. And at the rate of pace of these incredible new models coming out with new iterations, new improvement. We just saw ChatGPT 5.5 come out last week, better in some metrics than Nano Banana, and creating graphics and pictures, and now agentic, and gives you all the things that Claude gives you. There is so much going on, and I always tell people this: don't keep changing the AI model that you use. Don't keep switching from Chat to Gemini to Claude back to Chat, because eventually they're all going to be doing the same thing. And you have about 10 companies that are all looking to do more or less the same thing, and they're all basically giving it away for free or for very, very low prices. That to me is the pure definition of an industry that's becoming commoditized, but the growth is so strong that the commoditized part, which is pretty bad for stocks, just seems to be pretty far off in the future. Google, it's Google's fault in a way, because it's Google's fault in a way because Google got us addicted to what? To free search, free internet. You go on Google and anything you need, anything you want, you search it on Google. It didn't cost you anything. Yes, your information, your searches were sold to other companies, to the marketers like Facebook and GM and other companies that pay dearly for your search information so that they can market to you, so they can market to you exactly what you were searching for. But it was basically free to use Google. Google got us addicted to free search, free internet usage. So now when companies come out and say it's 20 bucks a month, 30 bucks a month, 50, 100, $200 a month, we are going to see if it's really worth it, if consumers and businesses really want to pay for this stuff. I think most businesses and consumers will pay, but I think as soon as ChatGPT raises their price too high, enterprises are going to start looking at Claude. And when they raise their prices too much, we're going to start looking at Gemini. Gemini is owned by Google. And you know what? Google actually has the money and the staying power and the revenue and the cash flow to keep funding their AI expansion, as opposed to Claude, which is owned by Anthropic, and ChatGPT, which is opened by OpenAI. They have to keep raising money from the markets, and they have to keep promising the big returns, the big return on investment to their investors one day. We'll see how it shakes out, and that's why this week is a pivotal week. Thanks for watching. If you have any questions, reach out to me. And as we get into the show on Thursday, we'll have a lot more to talk about. All right? See you soon. Thanks.